Okay, so you know how sometimes there's like a big financial announcement and you kind of glance at it in the news?
Yeah.
And you're like, what's the big deal?
Right.
And you don't really think much about it.
Yeah.
Well, one of those happened recently out of South Korea.
Uh-huh.
It was from a company called Hanwha Aerospace.
Oh, yeah, I saw that.
Yeah, and it was a pretty big announcement they dropped.
What was it?
It was a rights offering for 3.6 trillion KRW.
Whoa. Yeah, that's a lot of money.
Like, that's a lot of money. And so if you're like me, you probably saw that and thought, hold on, what's the real story here?
You know, what's really going on? What does it mean for them? What does it mean for the defense industry? What does it mean for...
Yeah, exactly.
Wow.
So that's kind of what we're going to be looking into today in our deep dive.
Yeah, we're going to try to like unpack this decision, see what they're really going for here.
Right. Is this a brilliant strategic move or are they kind of overreaching here?
Yeah, we're going to look at it from all angles. We're going to look at it from all the different perspectives, and then we'll try to give you the key insights from all the news and analysis that's out there.
Right. We went through and read all those articles and expert opinions, and we're going to try to boil it down for you so you can understand what's happening.
Exactly.
So let's just dive right in.
Let's do it.
What exactly did Hanwha Aerospace announce?
So the big thing is this rights offering, 3.6 trillion KRW, like we said before.
Right.
It was announced on March 20th, and just kind of break down how it works for anyone listening who doesn't quite understand what a rights offering is.
Yeah.
It's basically, they're using this method called shareholder allocation, followed by public offering of forfeited shares.
Okay.
Which is a mouthful.
Yeah.
But basically it means that existing shareholders, they get the first chance to buy these new shares that are being offered.
Okay.
And if any of those shareholders decide not to buy their full allotment, or they don't want to buy any, then those leftover shares are offered to the general public.
Okay, so that part is kind of standard for a rights offering.
Totally.
But what really gets you, I think, is the sheer size of it.
Oh, absolutely.
Like we said, 3.6 trillion KRW. That's huge.
Yeah, they're planning to issue these new shares. It's 605,000 KRW per share.
Okay.
They expect the new shares to start trading around June 25th. But yeah, you're right. The really crazy thing is the size. We said 3.6 trillion KRW.
Right.
That's roughly 13% of the company's entire market cap.
Like, that's a huge percentage.
It's massive.
Right.
And that really makes you think, why did they need so much money? What's going on?
Yeah, exactly. What did they say when they made the announcement?
So they said the funding is going to go to a few different key areas.
Okay.
One is they want to really boost their production capabilities. For the future. They want to invest in a bunch of new facilities.
Like what kind of facilities?
So they mentioned like an MCS smart factory.
Okay.
And then plants for manufacturing engines for UAVs.
Oh, wow.
Yeah. So unmanned aerial vehicles.
Yeah, those are becoming really important in the defense industry.
Huge. Yeah, absolutely.
Okay, so that's one area. What else?
Yeah. So a big chunk of the money is also going to support their joint ventures.
Oh, okay.
In a few really key regions.
Like where are we talking?
So they mentioned Saudi Arabia.
Okay. Big player in the defense industry.
Yeah, absolutely. Then Eastern Europe. And then, believe it or not, the United States.
Oh, wow. So this is a global kind of expansion.
Yeah, for sure.
Oh, okay.
And then the last thing they said is they want to use some of this money to buy shares in shipbuilding companies.
Whoa, really? Shipbuilding now. How does that fit in?
That seems to be part of this bigger strategy of expanding globally.
Okay, interesting.
Yeah, they're branching out.
So it sounds like they've got some pretty ambitious plans.
Very ambitious.
Yeah, spanning like multiple continents, even branching out into new industries.
Totally.
But one thing that our sources pointed out was that like a lot of these investments, they're not planned to actually happen until like 2025 to 2030.
Right, the next 5 years.
Yeah, so why raise all this money now?
Right now, that's a good question. And that's where a lot of the skepticism is coming from.
I see.
In the market. So even though they're presenting this like grand vision of growth, long-term growth, not everyone is thrilled about it.
I see.
Like I was reading that at an emergency investor relations meeting.
Oh, wow. Emergency meeting.
Yeah, they had to call one.
Okay.
And an analyst from Nomura Financial Investment straight up said that the company didn't seem to care enough about what the shareholders thought.
Oh, wow.
Yeah. And especially since Hanwha has a good credit rating.
Right. They're not like desperate for money.
Right.
So that's a pretty big criticism.
Yeah, it's a big deal.
Oh, okay.
And then another analyst, Choi Kwang-sik from Dale Investment and Securities, he also said some interesting stuff.
Okay.
In his analysis, he was basically saying, look, I get that these investments are probably important for the future of the company.
Okay.
But he was really questioning why they needed to raise money this way.
Right.
He said that based on their current earnings, they could probably just fund this stuff over the next 5 years.
Just with the money they're already making.
Exactly. And that's why some people are saying that this rights offering is maybe a little bit unnecessary.
Wow. Okay.
Yeah.
So if they could just fund it with their regular earnings, why go this route? Why do this big rights offering that's upsetting people?
Right. That's the million-dollar question.
Yeah.
So this is where it gets kind of tricky for shareholders.
Okay. How so?
The price for these new shares is set at 605,000 KRW, which is about 15% lower than the market price was when they made the announcement.
Okay.
So if you're a current shareholder, you're in a tough spot.
Okay. Why?
Because if you choose not to buy any of these new shares, your stake in the company is going to get smaller.
Right. Because there's more shares out there.
Exactly. Dilution.
Yeah.
So your slice of the pie gets smaller.
Right.
Even though the company's still the same size.
Right. Okay. So you own less of the company. But what if you do decide to buy more shares?
Well, then you got to put up a lot of money.
Right.
You know, potentially a really big investment.
Especially if you're like a small investor.
Yeah.
You might not have that kind of cash lying around.
Exactly.
Okay.
But from Hanwha's perspective, this might be a really good time for them to do this.
How so?
Because their stock price is high.
Okay.
So they can raise a lot of money.
Right.
Really efficiently compared to like taking out loans or something.
I see. So it's kind of a win for them.
Yeah. You could see it that way.
But maybe not such a win for the shareholders.
Maybe not.
And the market seems to agree because like right after this announcement, the stock price actually went down.
Big time. Yeah. It dropped by almost 7%.
Whoa, really?
Yeah. Like 46,000 KRW per share.
Wow.
Yeah. So the market is not happy.
You can see that reflected in the price.
For sure.
Okay. So that's the announcement, the size, the reasons, and then the reaction.
Yeah.
But there's another piece to this puzzle, isn't there? Something about commercial law in South Korea.
Right.
What's going on with that?
So the timing of this is really interesting.
Okay.
Because, get this, the National Assembly just passed a revision to the commercial law. And it's just waiting for the final approval from the acting president, Choi Sang-mok.
Okay.
But the thing is, this revision has some clauses in it.
Yeah.
That are really important to this whole situation.
Oh, okay. What do they say?
So they basically say that public offerings are going to be prioritized. Over the rights of existing shareholders.
So that's going to weaken their influence?
Oh, potentially.
Yeah. Interesting.
So some people are saying that Hanwha is doing this now.
This big offering.
This huge offering right now. Before this new law takes effect.
Okay, so they can take advantage of the old system.
That's what they're saying. Yeah, like they're trying to sneak it in.
Wow, so it's like a strategic move.
Very strategic.
Okay, so that's a whole other layer to this.
Totally.
Okay, so we've got the immediate financial stuff. We've got the legal timing.
Yeah.
But what about the big picture? Like, what are analysts saying about Hanwha's big ambitions here?
Yeah, so it seems like this isn't just about raising a bunch of cash. Right. Like right now, analysts are saying this is about becoming a major player in the global defense industry.
I see. Yeah.
And if you think about it, the global defense market is changing a lot.
How so?
Or like Saudi Arabia. Yeah. They've got that whole Vision 2030 thing going on.
Yeah, huge investments.
Tons of money.
Right.
And then Europe, they're pushing their own defense strategy.
What's it called?
The EDIS European Defense Industrial Strategy.
Okay.
And even the U.S., their procurement is changing. They really want companies that have a global presence.
So it's not enough to just be big in your own country anymore.
Not at all. You got to be global.
Wow.
Yeah.
So Hanwha is trying to get ahead of this trend.
That's what it looks like.
Yeah.
One analyst even said that they could become like the only Korean defense company.
The only one.
Yeah, the only one that can really compete on a global scale.
Wow. Okay.
And they've already had some success internationally.
Like what?
Well, they just got a big contract in Australia.
What was that for?
For their Redback armored vehicle.
Oh, yeah. I think I read about that.
Yeah. So they're already making moves.
Okay.
And it seems like this money they're raising is going to be used to really expand in those key regions we talked about.
Like Saudi Arabia or Eastern Europe.
Saudi Arabia, Romania, U.S.
U.S., okay.
Yeah. Those are the places to be if you want to be a global defense company.
So it's a big gamble.
It's a huge gamble.
But it could pay off big time.
If it works. Yeah.
So for the shareholders, it's kind of a mixed bag.
Totally.
They might lose out in the short term.
Yeah, their shares might be diluted. They might have to invest more money.
Right.
And the stock price could keep going down.
No, in the long term.
Yeah, in the long term. If this all works out.
Hanwha could become like a giant.
A global powerhouse.
Yeah.
It's really interesting.
So to sum it all up for you, the listener, this rights offering is a really complicated thing.
Super complicated.
Lots of moving parts.
Yeah.
It could be bad for the shareholders right now.
It could be.
But it's all tied to this plan.
This ambitious plan.
Yeah, to become a global player in the defense industry.
And they're taking advantage of these big changes happening all over the world.
Right, and they're doing it right before the law changes.
Yeah, that timing is really something.
So it really makes you think, do you think this is the right move for them?
Yeah, is this going to work out for them? Are they going to be able to pull it off?
Or are they going to crash and burn?
Yeah. And what about the shareholders? Are they going to be okay?
Yeah. What do you think are the most important factors that are going to determine whether they succeed or not?
That's a great question.
Yeah, I don't know the answer.
Right.
But it's something to think about.
For sure.
And if you want to learn more about this whole situation, we recommend checking out some reports on Saudi Arabia's Vision 2030.
That's a good one.
Or you could look into what's going on with Europe's defense strategies.
Yeah, the EDs.
Yeah, it'll give you a better understanding of the whole global picture.
The big picture.
Yeah, and then you can decide for yourself whether you think Hanwha's gamble is going to pay off.
Yeah. It's going to be interesting to see what happens.
Thanks for joining us on this deep dive.
We'll see you next time.
Bye.